Welcome to the Rose Show podcast. Thank you for joining us today. I have the high honor of being here with a legend, pioneer and creator of the modern day Anchored VWAP, the most amazing all-in-one technical indicator for the most important factors: price, volume, time. A true catalyst and known as one of the best indie traders in the business, Brian Shannon, CMT. Brian, you are an entrepreneur, best-selling author, technical analyst, trader, and CEO and founder of Alphatrends, a stock education company. So happy and honored to have you here today. So how you doing there in Colorado?
Doing great, Rosanna. Thanks for having me on. I've got a lot of respect for what you're doing here lately. I just kind of think I found out about you about 6 months ago, and you were an immediate follow. You're super smart, ask great questions, and I'm looking forward to this discussion today.
Thank you so much. I appreciate that very much. So let's get started and let's get into the mind of the AVWAPper himself, the Anchored VWAP top expert. You know, you took an overlooked indicator and you demonstrated its power and how it is the most important, in my opinion, and the most valuable indicator, as only price pays. I guess you
Right.
agree with that one. And I love it. It's now my favorite indicator. You are the creator of the modern day Anchored VWAP. Your new book right here, it's actually a quite beautiful book. Colorful, Maximum Trading Gains with Anchored VWAP. It's amazing. It's like a Bible on the AVWAP, beautifully written. I love reading it. I actually really enjoyed it. I loved how you incorporated philosophy, market psychology, risk management, and you tied it all in and in a technical book, which usually I have to, no knock on anyone else, but they're usually pretty dry. And this was exciting. This was fun. And
That's
I
awesome.
actually enjoyed reading it, and thank you for writing it. So you actually simplify quite complex concepts and you make them easy for everyone to understand, which is special. And I tend to be more of a fundamentalist, having a mathematical background, and you've truly converted me to looking at AVWAP even before the fundamentals. I think it's so important and it's a really fun indicator to work with. So before we start, if you want to make money in the market, I suggest this book. It's key on timing your entries. So Brian, please tell us all, how did it all begin?
Well, with the Anchored VWAP, it was, kind of interesting that in I think it was the year 2003 that I first saw this, thing called VWAP on a chart platform I was using at the time called Realtek. And I looked at it and it would show the volume weighted average price for one day. And I kept noticing that, the market would pull back on a very short-term time frame and bounce precisely at that level. So I started using it for my day trades and found it was, pretty exciting and, helped my profitability. So I looked for, up and down for information, couldn't find anything written about it, really. There was like a chapter in one book that, really went basic into just what it was, but nothing as far as an analysis tool. So I was thinking, well, people don't talk about it. I'm just going to keep using this thing. And then I found out a way where I could, see it for more than one day. And it was just, a basic hack of the platform. I'm not like a hacker. Like I didn't write code. It's just the way I manipulated how to, see it. And then I started, using it and noticing from an earnings report that it would bounce precisely, when it pulled back to the volume weighted average price from the earnings report and that sort of thing. So I kept using it for myself personally. In 2008, I wrote an article called Chase the Gap or Wait for VWAP, and that got picked up by I think it was, I don't know if they're still around. What is the name of the site? Tradethemarkets.com. They picked it up, and it's a strategy I still use today, which is just, if the stock gaps up, it's on your watch list. We all have that frustration and want to fight the FOMO, but a lot of people, aren't good at that, so they just jump in and buy the stock. I give it about 5 or 10 minutes to kind of settle down a little bit. And ideally, what I want to see in a long stock is it gaps up, It pulls back below the volume weighted average price, trends, stays below that for about 10 minutes, but holds the majority of the gains for the day. And when it gets back above the daily volume weighted average price, it tells me with 100% certainty, now the average buyer from the open is now in a winning position. The average short seller is in a losing position. So the trend is my friend here. I want to get involved because the very short-term time frame aligns with what I'm seeing on the bigger picture. So, it just kind of evolved from there, Rosanna. And in 2015, I was still using Realtic software. And I was at one of these trade shows and talking to, some people from TC 2000. And I had a lot of respect for their work and their platform. And they said, Brian, we'd like you to use our platform and, get it out there, help us get it out there and do some, use it in your videos. I said, well, tell you what, if you can do a point and click anchored volume weighted average price, I'll do it. I'll use your software. I'll jump over because that would be a tremendous tool. So about 3 weeks later, they said, we did it. I was like, you're kidding me. No way. And sure enough, it's, it's still my favorite software to this day because it's so easy to use. So it's just kind of evolved from there. In 2018 or 19, I went to a chartered market technician symposium in New York and met Jay Woods, and he was doing a panel. I asked him a question about, how do you see people using multiple day VWAPs? And we got to discuss it. And I told him what I was doing and how uncanny it was, but no one else was doing this. So I said, you know what, I'm going to write a book about this. So this was, I think I said it was 2018. So it was, it might have even been in 2017. But so I started just kind of making notes and, getting into it and thinking about how I want to construct a book. I would put it down for 6 months, 9 months at a time. And I'm not a natural writer. So to get the words right, it took me a lot of time. But that's kind of that in a nutshell, Rosanna.
Thank you so much. Well, you certainly fooled us because you do look like a natural writer in this book. It's one thing to write a book. That's a huge accomplishment. It's another to write it that's so lively and informative and makes it fun to read. So congrats on that and being a best-selling author, not just an author. So thank you for that story as well. So let's talk about your trading before we go into the Anchored VWAP. Let's talk about you as the CMT, the technical analyst and the trader. What is your trading style, your favorite? What works for you? I know you use it across multiple time frames, but let's know about you. Are you an options trader, shares, and your style, please?
Yeah, so it's kind of been ever since I started out as a retail broker, and that was kind of longer term stuff. I gravitated towards trading early on, and left the brokerage business to become a full-time trader, naively too, but that's a different story. So I've always been kind of short-term oriented simply because that's where I can best control risk. A lot of people think of short-term trading as riskier, but it's kind of like forecasting the weather. You can, the weathermen are pretty good 2 to 3, 4, 5 days out. But if they go out to a month or 3 months, they can give you seasonal tendencies, just like we have seasonal tendencies in the market. But I want to be able to get involved at the onset of momentum. And if that momentum does not follow through, I want to get out really quickly. So that's why I've gravitated towards the shorter term time frame. My preferred time frame is swing trades. If they're wrong, I get stopped out that day. But if I'm correct, I like to get in pretty heavy from the start because my timing, into the entry is probably my strongest suit. And so I get in heavy, I sell a little bit off, maybe even on day, ideally on day one, so I can reduce my overnight risk. And then I'll generally sell a third of my position quickly if the stock moves. And then I'll hold a 2/3 position with reduced exposure and reduced risk because I've taken a third off profitably. So then for the other 2/3, I'll simply, let's say it's a long trade, I'll look at a, like probably generally about a 15-minute time frame. So going back 10 to 15 days. And as long as the pattern of higher highs and higher lows on that time frame exists, I'll keep raising my stop up under those higher lows. And sometimes I'll hold the stock for 3 weeks. Sometimes I'll hold it for 3 days. I don't have a goal necessarily. I mean, as long as possible, because it means it's working. But my goal is to listen objectively to the message of the market. And if I'm trend trading, which is what I do, then I have to obey the definition of trend: higher highs and higher lows. And on the flip side, on the short side, lower highs and lower lows. So I'm going to place my stop above each one of those successively lower highs and wait for the market to tell me the momentum shifting, time to get out, reassess, move on to a different stock. Just, take your profits and be good with that.
Absolutely. Thank you. I agree with you on that. The swing trading, my swing trading has gotten shorter and shorter, especially in this market, and we're filled with uncertainty. I think the only certainty is uncertainty at this point. So it's difficult to look past even a few weeks at this point.
Right.
So yeah, thank you so much for that. Now, that transformation to becoming an author. Your first book, let's just talk about that one. Technical Analysis Using Multiple Time Frames in 2008.
Yes.
It's a complete guide to understanding market structure and the psychology of price movement. I urge everyone to purchase that as well. I actually just recently got that book. After reading this one, I purchased the other book, and I'm so excited to read that as well. And I have to mention to everyone, the reviews on it are impressive. I mean, practically 5-star reviews, and it's called the best trading book out there. I mean, that's a pretty bold statement. Arguably the best book on technical analysis. Very impressive. So, Brian, you had these great secret weapons to lower risk and increase profits, and now you shared them with all. What was that catalyst that caused you to say, you know what, I'm going to write books on it?
Yeah, great question. So part of my background is I had a day trading office in downtown Denver, and I had a partner who was basically a thief. I didn't realize that for a while, and I found out, and I said, well, listen, we got to dissolve this thing. Found a buyer for the business, and it was a buyer of, a competitor. It was a competing, basically day trading firm at that time in the Denver area. And the owner of that was a real accomplished, businessman, and he had written a book that became, that went on the New York Times bestseller list about, secrets for electronic day trading or something like that. That's, when it was kind of new. This was 20 years ago or more. So, I looked at his book, and I was an arrogant, 20-something-year-old, and said, that book's not that great. I could write a better book than that. And so I kind of started plotting, I'm going to write a book. This was probably 2002. And, and then in 2003, I'm thinking, maybe I could write a better book, but this is more challenging than I thought it would be. So I would just write outlines. And, and I was teaching classes about technical analysis. So that helped really cement my thoughts as well. And, so I got all these outlines together one day, probably in early 2007. I remember telling my dad, because I've been talking about writing a book. I said, well, Dad, I can see the finished product. I just combined all of my outlines. Now I can see it. He's like, well, slow down there. How many words have you written? I said, none, but I've got the master outline. It's taken me years to get to this outline. Now I just have to go and fill it in. And that's really what it was. I mean, to start out with a great outline, I tried to do that with the new book, but I didn't know where it was going still, what I wanted to do. So this one, in a way, was more difficult, basically because I didn't have that arrogance that I could just do it. I really thought, well, now I have a reputation. I, need to make my sophomore album great, and follow it up with something really good and easy to understand. So as I mentioned, I'm not a natural born writer. The fact that I wrote this book means I wrote each chapter probably about 10 to 12 times to get it to where it is. And that's, yeah, I don't know anyone who just sits down and writes a book. Maybe they do that with a novel, but definitely not a nonfiction book. There's a lot of research. There's a lot of just, day to day, my own trading. I learned from it as over the last 5 years, I learned more and more about what I'm doing and what I want to do with this book. Um, so that, that's it. I've just, I've been told I'm a good teacher at breaking things down and explaining them in simple concepts. So I wanted to do that with this book and say, a lot of books you see out there are just kind of book reports, about the market, that no one's really adding anything new. And this one, I said, well, it's going to be new. This is stuff people aren't writing about or even talking about. And I gave a lot away over the last couple of years in my tweets about what it would be, but I didn't, I held some stuff back, and it was so hard because, I think I get a good idea. I want to share it. So anyways, writing the book just kind of came. And then I think it was last year about this time, I finally got serious and said, I got to get this thing done, and really just started, you know, honing in on writing. And every weekend I would, not go out during the weekend. I would not go hiking or fishing or skiing, or I would just sit down and write. And writing to me, it's not like I sat, and that's the other thing too, is I would say I can't do that today. I've got to write. Today's a writing day. Well, what a writing day would look like is I would sit down at the computer, check my email. I'd look at some charts to kind of get my mind going. And then I'd get drawn into Twitter, and I'd start, doing some tweets. Then I go downstairs to the refrigerator and get something. Then an hour and a half has gone by and I haven't written anything. Anyways, that's my writing style. And so at the end of a writing day, I might have written, 500 words. So it's tough to get it. They're up there, but they're tough to get out.
Absolutely. Thank you for sharing that experience with us. I admire you and being able to continue and complete an amazing book. And thank you so much for sharing all of this wealth of knowledge with everyone. This is truly a gift to the whole trading and investing community, the whole financial community. So it's an amazing book. And, you're a true entrepreneur. And you take these ideas that you have, these creative ideas, and you were able to successfully turn them into a great business, Alphatrends, but also two amazing books. These are your creations, and definitely be proud of yourself for what you've created. It all came together, and it's amazing, a true pioneer. Let's talk about this Anchored VWAP
Yes.
and the book. I love it. It's, volume is super important at price. It's about supply and demand, having a strong background in economics, business background, a serial entrepreneur myself for over 25 years now. Supply and demand is everything. And buyers and sellers make up all markets. You look at macro, you look at the market for commodities, anything. So of course it is key in the stock market. And you, with your Anchored VWAP, pinpoint that. And price is the evidence we need. That's the most important factor. It's, it's not about trying to predict human decisions. It's how they actually decide. And price tells us that. And your Anchored VWAP gives us everything we need to know. So please, what I'd like to go into is the importance of this Anchored VWAP. And you mention it in your book, and you've sold me. I have no desire to use the VWAP. I love the Anchored VWAP, and placing it with all these amazing places, especially the high prices and the low pricing. Tell us about the importance of it and how the institutions who we as retailers must follow, how they use it, please.
Sure. Well, so the VWAP itself is just for one day, the volume weighted average price. And the difference with, the anchor is we're just simply starting the measurement of this supply and demand from a place other than 9:30 a.m. Eastern in US equities. So the anchoring in what the VWAP tells us in simple terms is who's in control, VWAP for the day. If prices on average are rising, or there's more volume coming into the market on the up moves, that will be seen through this cumulative volume weighted average price line that develops throughout the day. So it's similar to a moving average in the way that is represented on the chart. It's not a true moving average where the old periods get replaced with the new data. Instead, again, it's cumulative. And that's the beauty of it, is that, we've created these, time periods, the, 20-day moving average, 50-day moving average, the market is just agreed upon. There's no real reason for a 20-day moving average or a 21 exponential. What we want to measure is supply and demand from something that changed the perception of the value of a stock rapidly, basically, a rapid adjustment, some supply and demand shock, basically. A supply and demand shock might occur because of a Federal Reserve meeting, an earnings report, an FDA report, or something like that. But we also want to look at turning points in the market. We only know what the high was, last month, 3 to 4 days after it occurred, and we look at it and say that was an important high because we backed away from it. So we want to start measuring from that point. And now here we are in early March. We can say that's the high for the year, at least so far. And measuring from that point by placing an anchor there, what it tells us with 100% certainty is that the sellers are in control from the high point. They're still in control. So, the average person who's been buying this dip from that February high is on average losing money. The average short seller, however, is gaining money. They're in the right position, at least for that time frame. So again, going back to the original book, Technical Analysis Using Multiple Time Frames, we want to get a look at the combination of time frames to see where they're aligned and come in and say, well, now it's looking like it's coming into alignment because we're holding the volume weighted average price from an important low, and the volume weighted average price from the high, we're starting to compress between there. And now we know that battle for control is really being fought hard because the longer term trend, might be higher, let's say in an individual stock. We look at it as a pullback and more likely to, continue higher than reverse. That's just a basic premise of principle of technical analysis, a foundation of it. That a trend once established is more likely to continue than reverse. So I think I went off on a tangent there, Rosanna.
I love it.
Reel me back in.
I love your tangents. Feel free to go off on as many as you like. We love going into your mind and your thinking of the Anchored VWAP. So every bit of information you give us is just more knowledge for us to understand it more. So thank you. I love how you say in the book how the Anchored VWAP is about identifying low risk, high probability for market and stock opportunities. That's key. Risk management is number one. Right. So when we take our trades, we want to lower the risk for the reward. We want to increase our R multiple. And so this is an ideal tool, and this is key. And it's also a tool that's used in any time frame. And that's very, very important to understand because it helps us make better market timing decisions. It's not just about identifying a stock. It's about timing it right because, hey, I can buy a great stock, but if I buy in the wrong time, it'll be a losing trade. So that's key. Before we are so honored to go through your mind and you can show us how you use the Anchored VWAP, I'd like to talk about a very important topic that you mentioned in the book, which is market psychology. And you started talking about it just now. You personify the market. You bring it to the foundation, which is people. The market is made up of buyers and sellers. And it's about their psychology, their reactions, and their emotions, and how they make their decisions. And price tells us how they decided. You talk about the biases. You actually mentioned, which I love, it's right in my field. You talk about that Daniel Kahneman's thinking fast and slow, which is so important. And that's going to go into how you make your decisions as an expert in this topic. There's system one and system two thinking. Traders usually use system one thinking, which is more of the fast, associative, automatic decisions. And that's where the biases arise. And you talk about anchoring, how we have personal anchoring biases and all that. And you make a great points how the anchored VWAP actually helps overcome these biases because it helps you remain objective. Could you please tell us about that? Because a lot of people are confused. They say, oh, isn't it subjective? And it's actually quite objective.
Yeah, so the subjectivity comes in, where do you anchor from? And that's why I spent a chapter on here are the places to anchor, and then strategies going into how to use those anchor points as far as potential support and resistance. I call them levels of interest. Just this week we've come down in the NASDAQ 100 to the anchored volume weighted average price from the beginning of the year, and for 3 days it looked like we were going to hold that, and now we've broken below it. So I look at it and I say, here's the truth from the beginning of the year. The average participant, the collective psychology of the market, the anchor point for when we buy a stock, we're anchored to it. We say, I bought a stock at 108. That's my anchor. I measure my success or failure based on that. I might be the only person in the world that cares about 108. Some people will say the most important price is the closing price. No, it's not. It's how the price closed in relation to where I own it. The market is a selfish endeavor. It's all about me, me, me. Am I doing well in this trade, or am I do I feel stupid in what's going on here, searching the news, and how do I fight that? You say, well, I want to look at an objective level such as the beginning of the year, because that's important in terms of how money managers get paid. And when we look at that and say, here's a potential level of support, it's a level of interest, then I say, well, I don't want to just blindly buy there. And I've got a chapter about, some people will just buy the touch of the VWAP. And I've seen it work just countless times where it is the exact high or low. What I prefer is not to buy the test, but instead to wait for evidence. I look at the shorter term timeframes and I say, okay, who's in control from the low that it made 3 days ago? We're back below that volume weighted average price. The buyers haven't gained control from that point yet. So it's still looking suspicious to me. I don't want to commit yet. I don't want to do the dirty work. I don't want to take risk. My job is to minimize risk and look at the market and say, let all those institutions with their hundreds of millions of dollars battle it out and figure out who's going to take control. And once it's evident to me that the evidence says the buyers are back in control, well, then I'm going to buy it, but I'm going to buy it, as I do with everything, in an extreme measure of confidence. We all have that fear when we buy it, like, oh, what if I'm wrong? I don't know if I'm right. People say, well, Brian, what do you think this is the place to buy? I don't know. The market will tell us later. I think it's a good place to start looking. And if we see evidence on a shorter term time frame, I'm going to get involved under these conditions. And the main condition is, do I have a low risk place where I can set my stop? Do I have a recent low that I can protect my stop, my position against? So if it breaks that recent low, then I'm going to get out of it, because I thought the market was going higher. Instead, it breaks a lower low. Well, as a trend trader, there's no reason for me to continue to be involved. So I'm just going to cut the cord. And that's an unemotional rule of engagement or disengagement, really, is I'm just going to get out under these conditions, because I've been doing technical analysis for 32 years. And I believe that it's true. A trend once established is more likely to continue than reverse. But if it does reverse, why on earth would I continue to hold it? I've done that in the past. I've learned the hard way. That's how you lose money.
Exactly. Thank you so much. So yes, once again, it helps overcome that attachment, those feelings we get by observing that line and knowing it's just giving us the objective. That's where the price, volume, and time all come together right there as the trend. We follow the trend and we see where they all meet with this anchored VWAP. Love it. I love your Venn diagram in the book. Actually, I will show it because that's a beautiful thing. Did I guess you came up with that yourself. I love that.
I did. You can see it's not the most advanced graphic.
Yeah, I love it. I love Venn diagrams. So you put PVT, price, volume, time, and you put the anchored VWAP right in the middle. And that was very creative, I have to say.
Thanks.
So you're welcome. So yeah, we have aversion to loss. These are part of our own biases, some costs and all that. And we also have fear of missing out. By following this, we can help overcome that. And I know in the book you mentioned about buying the touch and you're more risk averse. So you like to wait for that bounce. So that's very important as well. So I'd like to now talk about expertise, intuitive decision making, which is what you do as an expert in this field. We want to go into your mind and how you place the anchored VWAP. Please show us what feels right for you on these charts.
Okay, well, I don't know if you just saw my eyes darting around, but I see this market is just something just happened here. Wow. This is a 1 minute chart of the S&P 500, and we just rallied 2 points instantly. So this is an important event. I don't know what this is. I haven't looked at the news. I've been talking to you, but this is, occurred 3 minutes ago. This is an important level. I'm going to put an anchored VWAP right there live as we speak, and let me just put it in the right place. That's where this move began. So let me just show you what I expect will happen in the next couple minutes is that if that was the little peak, we're going to start to see something like this. Mm-hmm. And then if there's a good reason for that, then we'll see this VWAP from that beginning starts to find support. And I want to be a buyer here. At the same time, I'll put a VWAP off of that peak, and that will come down and look like this. And even on this 1 minute time frame, what we might start to see develop is a pinch between here. Now, that's what I'm thinking might happen. Maybe this was just some news that it completely falls apart. But I want to look and say, okay, this now looks like an important high to me, right? Mm-hmm. Even on this 1 minute chart, we're just making a lower low on the 1 minute chart. So I'm going to put a VWAP right there. And I'm going to color code that red just so that we can see, how that develops. So I'm thinking that it could likely pinch between those the way I just drew out. But while I'm looking for that to happen, I want to go to the 15-minute time frame and say, what's going on here? Is there anything, did we just make it up to the anchored VWAP from this peak right here, which ties with the 5-day moving average? And we didn't. But that, if we start to move again, this will be my very short-term target. And I know this isn't what most people are looking for, but we just happen to have something occurring live in the market that might end up being a very good lesson. So, we're pulling back to that. Now let's see if whatever the catalyst for this big supply demand shift 5 minutes ago, if we start to see buyers in here. Now, very short term, it's looking like it's maybe trying to, right? Mm-hmm. So let me just get rid of my drawings in there, and I'll put these volume weighted average price off the beginning and the peak right here. And let's see, just kind of how this develops. We had a big volume move up, lighter volume on the consolidation. We'll come back to this in a minute because I don't want this to be viewed as just a day trading tool. This is just an opportunity to potentially learn right here, right now. So a couple of stocks that I'm looking at, for instance, would include DT. And DT reported earnings over here. It gapped up. And now you can see that this blue is the year-to-date anchored VWAP. And it's been holding above that until today. On the right, we have a 15-minute time frame. So we broke below that, and then it acted as resistance early this morning. So that's telling me, one, it was in a pinch between the earnings report. We had that declining. And what I've really been looking for this stock to do was something along the lines of this, is for that pinch to get tighter and then break higher above here. This 5-day moving average would come up underneath it, and it would have been my intention to buy right here with a stop underneath the higher low that might be at that point. We don't know if that will be the point, but that's kind of the way I look at it, because when we look at this daily chart and we back it up to a weekly time frame, we've got a chart that looks like, we had a stage 2 uptrend, stage 3 distribution, stage 4 lower highs and lower lows decline. And if they didn't scare you out in there, they probably wore you out in here over the last year as it kind of went sideways. But during that time, what do we have? We have a rising 10, 20, 30, and 40-week moving average. We had a break of that range on an increase in volume. This weekly chart, we're seeing a diminished volume on this pullback. So when we look at it back to the daily time frame, here we are again. Now, I haven't given up on this stock yet, but I don't want to buy it while it's in that pinch, because it's just saying there's indecision here. There's no reason to really buy it yet. We're seeing a compression of energy. If this ends up being a shakeout, what I would be looking for here is that, let's just clean this up and say, let's say we can get back above this today. What would that accomplish? That would accomplish a lot of people who bought it over the last month after that earnings report. They're probably getting stopped out, giving up on it, saying enough's enough. I'm out of this. It made a lower low. It's below the year-to-date VWAP. And then other people might say, hey, I'm a short seller. I'm going to short it in here because I'm thinking it's going to go back on that daily time frame and go close that gap, which it might. I don't know. None of us knows. But the bullish scenario, if it could occur, would then, if it breaks below there, what happens is the people who are still holding it, they're the strong holders. They believe in that earnings report. They believe that we chased it for that gap and now we're going to add to it. So they're going to buy more shares. Who are they going to buy those shares from? They're not going to buy them from people who are now shorting the stock, because the people who are looking to short it say, hey, that was a failed breakdown. I'm not going to short my shares. The people who had their stops underneath this low, we've resolved the weak demand in the market. They've given up. So who's going to sell them that stock? So it might run up quickly to this 5-day moving average, create a higher low, and then be back into this pinch. And this ends up being, the people who are selling short in here right now, they're going to start to cover and say, oh boy, I'm wrong in here. So I've got to look at this and see if, and so it's about anticipation, right? I wanted to see it hold the year-to-date VWAP, and it didn't, but it didn't cost me anything. Just because that's what I wanted to occur and it didn't occur, it didn't cost me a dime. I'm waiting on the sidelines for this to develop. I'm waiting for the actual evidence. The market doesn't care what I think about the earnings report. It doesn't care what Warren Buffett thinks about the earnings report, which I haven't even looked at this one since then. But, here is Oxy Petroleum. They just reported the other day, and here's an important volume weighted average price. You can see it was defended here, pretty much generally in this area. And now it's being defended here as well. So, you just can't make these levels.
That's a year-to-date anchored
no,
VWAP?
the blue one is the year-to-date. So what I did here is I went back and said, where this move really began, started right here.
Right there, yes.
So I want to measure from that point. And you can see it was defended here and close to it here and close to it here. And now if it rallies up and then fails from here, we're going to see the opposite of what I just described on the other way, that we're going to see that, if it runs up in there, the shorts cover, and then the longs get in, then it breaks back down. Well, then those longs are going to be from the last year and a half, they're going to be in a losing position. So that would become a good potential short sale that would develop again with a period of lower highs and lower lows. It doesn't go straight down, but this is the type of activity that that just kind of, it's just there in my mind when I look at this
Yes.
chart. I don't have to, analyze it over and over again.
You see the patterns. It's that pattern matching that you have. You match it against recognizable prototypes in your mind from studying these charts. And now, are you going to put a pinch on this? And when you do a pinch, and I love in your book how you talk about it being a battle between buyers and sellers, and then you watch for that break between the pinch, and that's even a lower risk, higher probability trade. So when it breaks out of that pinch.
So look at, and I didn't even, I don't trade commodity stocks, number one. So this was just in the news the other day, so I was looking at it. But when we put an anchored VWAP off of that peak right there, it tried to get above it briefly. It was capped right here, and now you can say, yeah, it's pinching between those. But even here, to me, the way I want to see a pinch develop is I want to see that pinch tighten.
Tightened, yes.
And then the energy really compresses. If this stock were to go up, to 65.5 tomorrow and break above this volume weighted average price, I would look at it and say, wait a minute, it just went from 58 to 66. It just rallied 8 points on a $60 stock. That's 12.5%. I don't want to buy after a 12% rally when, look at the last 12, big rallies. They failed up in there. So I wouldn't chase it up there. I would say, now let's see if this pinch can tighten, and I'd rather buy it here. So if I buy it at this point, my most recent relevant higher low is down here. That's way too far. So I want to see it tighten up, buy it here, and then set my stop underneath this higher low. And now I only have to risk 2 points or 2.5 points versus 8 points.
Very nice. So with pinches, you use the highs and the lows. Do you find that the most effective with pinches?
Yeah, sometimes. So, here's a good one that's been good in Coinbase. So this just happens to be, let's take a look at the 30-minute time frame. That dark blue line is the year-to-date volume weighted average price. I mean, perfectly, they're buying it at that level. So what we want to say is, what about from the peak? And it's not perfectly through there, but from this gap that caused, where the supply and demand really shifted, you can see it's kind of pinching between there, and it's getting tighter. We have lower highs, but we have support. This might end up just breaking down, I think, on Coinbase. One that is developing is in Harley Davidson. But again, it's too tight. There's that year-to-date anchored VWAP on this 30-minute time frame. And then here was this gap. So that's an important event. But again, it's too loose in here. So again, maybe it runs up like this. I wouldn't care about that move. But if it then did this,
and then tightens up,
then I would be saying, okay, that confirms what I'm seeing on this weekly time frame and this daily time frame, that maybe that pinch is going to get tighter in there.
Very nice. Love that demonstration of the pinches. Now, the placement in your book, you talk about price highs and lows, and then you have the high volume, which emotional connections and price memories live. I love that point. Then the fundamental events, and then, a very important one I found fascinating and I didn't know, was that the year-to-date anchored VWAP is actually where institutions establish their fair price. Is that correct?
Well, here's the psychology behind the year-to-date anchored volume weighted average price. Let's say you have a fund that runs, a subsector group, little fund that is based on, blockchain, crypto technology, and their basket of stocks that they're compared against. I don't know what the benchmark is. We could do this, it'd be easier if I use the semiconductor index.
Sure.
Let's just do that. So the semiconductors, they're running a semiconductor fund. And here's the year-to-date anchored volume weighted average price. Well, the semis are up 12% or so year to date. This is the average price. And they want to outperform that, because if they outperform the benchmark, they're going to be able to get a bigger bonus at the end of the year. They're going to be able to keep their job, right? So, at the end of the year, when their investment committee says, hey, how well did Joe do with this healthcare? How well did Susan do with the semiconductors? Here's the benchmark. The SMH was up 14% at the end of the year. Joe or Susan was down 12%. Got to get rid of her, whatever. But what they'll do is they'll look at the components and they'll say, okay, well, AMD is an important component. Do I want to buy this stock and get at least as good as the average price in there? The volume weighted average price was originally called the price a naive trader could expect to obtain. So they're saying, this is average. If you can't do at least average, you probably don't have a job. You don't have business, having a job here. So as it comes, when the stock starts doing this, and it's up 30% year to date or whatever it was, and they're underweighted in AMD, they're feeling kind of stupid, and they're thinking, oh boy, I can't give into FOMO and buy up here and just chase this. But if it pulls back to the average price for the year, then I can sneak back into this stock and be as good as the rest of the market at least. And if it breaks down, maybe I can buy a little bit more and try to, so they're playing not only an absolute returns game, as we know, they're playing a relative game, which is kind of a silly game. I think that, if the market was down, if the S&P was down 12%, and I was only down 8%, I'm lauded as a hero, but you still lost money. That's not what we're trying to accomplish here.
Exactly. Wow. Very nice. Love this. Now, the handoffs. I know that's a word that you coined in your book, and you talk about that on trends. When you're on an uptrend, you go and you put the handoff in the higher lows, and the downtrend, you put it on the lower highs. Now that to me is sort of an art, I guess, knowing which ones to place it on. If you could show us how you do handoffs, and I saw in your book you have quite a few running at the same time, and you actually combine that with pinches as well.
Yeah, sure. Cool. So just like any head and shoulders pattern, let's say, your inverted head and shoulders pattern. Well, if you just look at the head and just the right shoulder, you actually see a cup and handle, right? So patterns morph and they change. And notice where the buyers, just real quickly, we didn't see perfect support at that level, but look at where the buyers just definitively took control from this rally. We had some pullback. So we want to avoid it in there. But this is where the buyers just said they took control. And again, this is why I don't buy the pullback to the volume weighted average price from that, but to buy right here when the buyers take control at that point. So now I want to measure it and say, as long as it holds above there, and so if this is a day trade, I would now have my stop under here, because that's the volume weighted average price from this little low. We've gone back above the volume weighted average price from this peak just 15 minutes ago. So I'm just following up on the, the little lesson that we have here in real time. So now it's running, and we can look at it on, and say, well, how does it look on different time frames? This is maybe the level I think it can get up to. Was there an event right here that reinforces it now? You can see the volume weighted average price from this low held as support. It was broken. Now it has the potential to become resistance. So this looks like a reasonable place to think it can go, 396. So where are we now? We're at 395 and a half. That looks like, maybe there's 50 cents of upside for a day trade in here before maybe you want to go look at the daily time frame and say, well, wait a minute, we're right on the 200-day moving average. Is that important? And just view what your time frame is. So going back to, let's go back to the SPY and say, we had an important low from COVID, and we rallied up and it pulled back and touched it right here. So, and then it rallied again. So that was where a new momentum campaign began. So we anchor one right to that point. I didn't do it properly. We anchor right to that touch.
Mm-hmm.
So we're handing it off at that point.
Yes.
Let's just go isolate this.
I love the name, handing it off like
So we're
that.
handing it off there. That's where the buyers, regain control.
Mm-hmm.
And then where was the last place that volume weighted average price was touched? Right here.
Ah, you can see
And then
that.
it kind of just got sloppy in there, but then it tested it again right here. And then right here. And that's close enough for me to say that's an important level. And here's a new momentum campaign. So we're just handing it off and saying, now, if I missed this prior move over here, well, maybe I can get back involved on strength here with my stop under that level. Maybe I get back involved here with my stop under this level. And the way I really want to look at it is what we just looked at on the 1 minute chart is we knew on this day that might be an important high. So where do the buyers regain control? Right here. 100% certain that the average short is from that point is losing money. The average long from that point is making money. So the momentum is shifted back up, just like we're seeing right now on this very short-term time frame. And in the book I wrote, just there's a lot of examples that I use, charts constructed of weekly time frame. And there's some in there with 1 minute time frames. And a lot of people will say, well, I'm not a day trader. This is foolish. Why would I look at this? Because here I'm able to explain in real time what occurs on every time frame. So when I look at this and I say, I'm long here, well, if it gets up to this point, that's pretty close to where I think it can go. So now I'm going to sell half of my position up here. Or if it doesn't get up to that so-called breakout point, I'm going to now maybe switch to this I'll make this a 2 minute time frame and say, if it makes a new 2 minute low, my stop is under that candle. If this is, let's say, the low of this candle, and we begin a new 2 minute period right here that looks like this, well, then I'll raise my stop underneath that 2 minute low as time progresses forward. So I have a time stop and I have a price objective to get a little bit of that risk off. So if I take this much gain on a third of it, that reduces my cost from here to really down to about right here. So now if I put my stop at break even on the balance, I can't lose money. So there's a lot going on there. And the key is, a lot of people want to be day traders. And they look at this and go, wow, you can just do this on a 1 minute chart. And it's a skill that's developed. It's that, I've been looking at these forever and I can see it in real time and wait for that objective. I don't want to buy this pullback because maybe I bought the pullback here at 395 and I panicked at 394.60 because this day trade looks like it's falling back apart. Well, now it's doing what it's supposed to do. So now again, my stop underneath this 2 minute low. And if it does this again the next 2 minutes, well, then my stop will go under here and just continue to let the market do what it's going to do. So if I, sell a third right here, my stop on another third goes underneath the higher low, then my cost basis on the balance is really down here. That's my balance on my final third. So I have the luxury now to say, maybe I can transition this to a longer term time frame. Maybe I'm thinking that, yeah, that was the low at the 200-day moving average back here where we made this big mess. And I'm going to be able to hold this for the next 3 days if it continues to move higher on that final third. But I won't want to break even on it. So more than likely, I would put a stop, right here or something to guarantee that I don't let this winning trade turn into a loser, because it's a winning trade right now. There's, and the thing is, most people want to chase it as it's doing this, rather than say it's normal for a stock once they run quickly because of news headline or whatever it is. I'm sure there probably was one. I have no idea what it is, nor do I care, because that doesn't help me make money. Looking at this helps me make money. So there you
I
have it.
love that. I love that. The slope and the rate of change. And what we notice is that the anchored VWAP is dynamic. It changes with the trades. And, you know, I am not a day trader myself, but I understand the importance of zooming in. It's like what you've done on this chart is amazing. You've taken the bigger time frame, the longer term, and we see that little tiny little red can, we see that little green, we see that little tiny little thing, and we want to know what's going on over there. So then you go to this chart and it's like you zoomed in, and now we get a closer view of what's really going on. So absolutely makes sense to look at it across all the time frames to get a better view of what is going on. And this is a great example here of that. Wow. Yeah, who
Look at this
cares
thing
about the
run. I mean,
news?
it's gone from 35.40 to 36.60. I mean, that's 8 minutes, right? 10 minutes right there. You know, $1.50 move. It's,
That's
you know,
it.
that's why if your
Yeah.
skill set is advanced enough to look at
Yeah.
1
Look
and
at
2
that
minute
volume.
charts,
That
there's
volume.
opportunities.
Absolutely. Look
And
at
the
all that
volume
volume
did,
we've had.
you know, you mentioned volume, and in here it did what it's supposed to do. It was up on big volume. The biggest volume occurred at the turning point. That was the peak right there. And then what happened to the volume? So that was this little turning point. The problem is we don't, you know, if the next candle went higher, we don't know that that's the turning point. But once it started pulling back and we added that volume weighted average price right there, what happened to the volume? It consolidated on light volume, and that gave us a clue that there was a big hurry to get involved. Now clearer heads are just kind of battling it out a little bit, but there's not a big hurry to get out. And then it gets back above here, and it wasn't spectacular volume. And that's the thing, that people wait for volume, end up buying on this candle, or waiting for the breakout, buy on that candle, versus looking at where did the buyers actually gain control
Right there with
here,
AVWAP. Yeah.
sell some to the breakout people, raise your stop up now underneath this 2-minute candle. And now it's in a no lose position here on a live trade. People say, well, that only works in hindsight. Well, there you go. F you.
Exactly. In your book, you make that clear point that if you buy the breakout, you actually lose out on more money you would have made if you had purchased it where it crossed over and broke right through that anchored VWAP right there, much
Yeah, so
lower.
you're getting in 60 cents late, which if you're a
Yeah.
day trader, that's giving up a
Significant.
big edge.
Absolutely. I love that. And it helps you remain objective instead of having fear of missing out. You watch that line, which tells you everything that you need to know. And right there, when it crosses over, beautiful. You make it look so simple, but I got to be honest with you. It is simple because I utilized something very similar with that and recently, and I had a successful trade, waiting for it to break through on that before the breakout. So I love that.
Yeah, well, so we want to anticipate. And you know, if we feel like we missed that out, we wait for the pullback. And if it doesn't pull back, well, then you missed the trade. So what? But instead you say, okay, I saw this occur out of the corner of my eye when we're talking, and I got excited. And I wanted to go run and put a VWAP on there. I was thinking, oh, I hope that, you know, talking to Rosanna, it doesn't cost me money. I've got an opportunity here. And getting involved right here, that's, you know, now the stop.
Awesome. This is live trading. This is so exciting. This is all live.
You know, it's continuing to move higher, and it's gone beyond what I thought would be a reasonable target
Look
at that 5-day moving average. And that's why I look at a target and, you know, a level of interest. I expect now that because the 5-day moving average is declining, this rally will not hold. Doesn't mean it can't go like this, but I think that if it does, it's more likely to do this in the next day, day and a half. So I'm thinking of all these time frames together and saying, well, then I want to put an anchored VWAP off of this low. That's the daily volume weighted average price. And maybe tomorrow it pulls back to today's volume weighted average price. And tomorrow's VWAP will look like this. And this is something in there as well. And I want to be a buyer right here with a stop under here. So it's always about not just looking what is, but what's the potential? Where are we going? So now
that pattern,
right here, it's just about, what is this low? This is 72 cents. This low is 70. So there, time to sell some. And that is a real aggressive stop for a day trade using that 2-minute rule right there that I have. So now I don't know that that's an important high, but we just had a really nice run and it was making higher lows for every 2-minute candle here. Now that trend has changed. So the very short-term momentum, I want to be out of some of it. And if this candle closes, well, for a very short-term trade, I'll go like this. I'll put an anchor right at that point, but I'll switch it to a 1-minute time frame.
Interesting.
And see that, will that now do something like this, where it kind of comes down to the VWAP from this low, and that VWAP off of that peak pinches, and maybe there's a re-entry even right here with a stop under here as the time progresses.
Wow, this is amazing. Right in the middle of our podcast, we had this major event occur, and we're getting it in live real time with the master, Brian Shannon. This is awesome. Wow, look at that.
Yeah, in some ways it's good to do it during live hours, because
this is so cool.
If I do a PowerPoint, you won't see this. But again, here we, and look at just traditional volume expands in the direction of the trend and diminishes on the pullback. That's a healthy volume pattern. And it's represented by the volume weighted average price is rising because it's volume driven through time, volume weighted average price. That's all we're looking at. It's
and your anticipation of the pattern seems to be working. Look at that, where the candle's going. It's going right in the pattern that you outlined.
We'll see. It's
so far it is. It's fascinating.
And it's like you said, I mean, it's just, this is what I'm thinking is likely to happen based on looking at charts like this, all day long for the last 32 years. We're saying that, you pick up a couple things, otherwise you shouldn't be in the business any longer.
Well, this is exactly where the expertise-based intuitive decision-making occurs. It's from this pattern matching that you have from 32 years of doing this. So we're learning from you, the master here with Anchored VWAP. This is impressive. And now the buy the dip. This is a very popular axiom that was further accelerated during the 2020 expansionary free money period. People are still doing it, but you have a great axiom that I love, which is buy the strength after the dip. So I noticed that you anchor with the recent high, and then when the dip occurs and then it comes back up, like you just showed us on this chart, past the anchored VWAP, that's the time to buy. So this is a clear example of buying the strength after the dip, which is a much safer, lower risk buy.
It is, because if you're buying during this pullback, and let's say you're leveraged, let's say you're trading the futures, I mean, we don't know what is going to happen. So we look at it and say, I mean, maybe this was just some BS headline and it could have just completely failed. Instead, of buying that dip and all that uncertainty, and maybe you got lucky and you bought there this one time. But 9 out of 10 times you're trying to buy one of these and you might just spit it out right there. So instead, what the anchored VWAP from this peak tells us right here, and this peak right here that I just drew in, is from that peak, once we pulled back, and you notice that I drew it about a minute later, that I anchored it right there, and I just anchored this one about 2 minutes ago, that the seller, from that little high point, the sellers took control for the very short-term time frame. Now it's most likely, as we were expecting in this one as well, as it's a short-term pullback, but it could have failed. So rather than buying all that uncertainty, when it gets back above this level, you can see it hit it once, twice, 3 times, and then went through. It tells me that anyone who shorted this rally because they thought it was up too much and it was going to fail, on average, they're losing money. Anyone who bought in here now is making money on average, and their confidence has increased. So here's the point where we can say with 100% certainty that the buyers have regained control
Mm-hmm.
from that peak. It doesn't mean they're going to maintain it because, stop under here, right? That little candle. And now from this peak, where I just drew it in, look at where we just found supply on that candle.
Yeah. Wow.
And maybe we're going to see, what I drew in, and maybe it's going to
Yes, it
break.
is filling in what you drew in.
It,
Look at that pattern of where you said it was going.
Again, it's not meant to be a prediction at all, Rosanna. I'm not a seer of the
Of course
future.
not, but you're
It's
looking at the patterns.
We're
It's impressive.
anticipating
Yeah.
what could happen
Mm-hmm.
based on what's kind of a normal thing. When the market gets a little bit giddy and you start seeing everyone tweeting about, hey, this stock can't go down ever again, you start getting really nervous.
Mm-hmm.
And so it's
Absolutely.
just about trying to keep that balance and realize that, this battle is being fought all day long between short sellers and buyers on every time frame. This is a minuscule little look. This is, the last 30, 25 minutes since we started talking about this trade. And that's just one little piece of today. Today, here's where today began. And again, look at how we gapped lower
Mm-hmm.
and we found buyers right near, not always exactly right, which is why I want to buy strength away from the VWAP if I'm looking to be a buyer. I don't want to buy the dip because where does my stop go? What's my objective level? And we can do a handoff right here. It
Mm-hmm.
really didn't provide us value because the market was going back and forth. But then we broke resistance. We did so on big volume. We pulled back on lighter volume. We're finding supply still at that 1 minute candle from the VWAP from that peak. So, let's see. We don't have to sit here and watch it. That's not the point. But the point is, again, it's fractal. Whatever occurs on one time frame, it's the same principle on every single
Mm-hmm.
time frame. And I was very careful and certain to make sure that I included stuff for day traders, for swing traders, and investors, and to show some examples where, you might have anticipated a breakout here, but it went down instead. So what's wrong with having a losing trade in a book? Because if you have a stop, it doesn't matter. It's just part of the process. We don't have to see every trading book filled with nothing but winners because that's not real life.
Yes, it's not. I think the average trader, even professional, I think their win rate is about 50, maybe 40, between 45 to 55%. So there are losers. It's about keeping those losses smaller. So it's important that you have the reality of trading because there will be losses, just like in life. We make mistakes, we fall down, but it's about picking ourselves up and going forward again every time. So that's true success. So
I bet you're a great mom, Rosanna, to those three boys.
no, I try. Thank you so much. I appreciate that. They learned early in life about losses and they're all competitive chess players. So
Cool.
yeah, so it's it's and trading is very similar to that. It's very trading is very gives you instant feedback. And you know right away.
Especially if you're on this time frame, right?
Yes, so right. This is absolutely, I love that it's zoomed in like this. You make it look so simple, and it is. It's a great indicator, the best indicator, in my opinion. I love that the gap we see in your book, you talk about the different gaps. There's many different gaps. And right here we had one. You anchored it to that 4 p.m. Yesterday, I believe it was the
Actually, to
close.
this morning's open.
Or was it this morning's open? Okay.
Yeah, because that's
Right
when
there.
that's when the supply and demand shock occurred on this volume. Now, if we really wanted to be accurate, we would look at the futures and consider the overnight volume as well. But this is generally close enough because there's not very much volume in the overnight session.
Perfect. I see that. So it was a gap and very nice. So I love how you speak about the short squeezes and then you go on to anchoring the VWAP to the IPO of companies. It's like the birth of a company is where you anchor it. Could you explain the psychology and thinking behind that?
Yeah, sure. So, the quote I used in there was one from Gann, which is, if you know the 0 point, you can measure anything. And for the 0 point for a stock is the birth of it, its IPO. There's a couple that came, so Mobileye is a great example. That they came public. Let's get off of this 1 minute time frame, and let me move that out of the way so we can see it. Let's look at a 30-minute time frame. So this orange is the volume weighted average price from the IPO. Okay. And it, initially, the stock was a hot IPO. The buyers took control. Then it spent a few days below that VWAP. It was rejected right there. And then the buyers took control and defended that general area. Here's the year-to-date anchored VWAP, and you can see that this is what I'm drawing in. This is what I do for Alphatrends subscribers each day, is say, here's what I think is possible. We test that year-to-date VWAP. We run up to the 5-day moving average, recompress. Here's our volume weighted average price off of the all-time high. So we're pinching between the year-to-date anchored VWAP and the all-time high. So if we get a rally that occurs like this, I want to be a buyer over here with an idea that maybe it runs up to here initially and then maybe pulls back and then pushes higher, beyond that 20-day moving average and continues. But right now, the stock is making lower highs and lower lows, and it got rejected right at the 5-day moving average. So now this is on the shortest time frame. This is a stage 4 decline since the middle of last month. This is maybe stage 1 accumulation, and this would represent the beginning of a new uptrend that's in alignment with the uptrend on the daily time frame where we see that. So, we've got this big pattern of higher highs and higher lows. But if you just buy out of FOMO up here at 45, you're down at 38. You're down a huge percentage, right? So we're at a 50-day moving average. We're at the year-to-date anchored VWAP. This is a level of interest. I don't want to buy it here, but I want to look at it and say this was prior resistance. Resistance broken tends to act as support. The 50-day moving average often acts as support. The year-to-date anchored VWAP often acts as support. So let's drill down to a shorter term time frame and see what's happening in that area. The 5-day moving average is still declining, so I don't trust it yet. But I know that it has the potential to change, because where we were 5 days ago is now over. We're getting rid of this data in the 5-day moving average calculation. Tomorrow we get rid of this data. So if this stock just goes sideways for the rest of the day, well, tomorrow morning we're going to get rid of this data, and that 5-day moving average will be flat to rising. So it'll make a higher high above the flat to rising 5-day moving average. And I wrote about this in the appendix. And that's where I want to be a buyer. My first level of interest as potential resistance would be up in here. And then you can go back and say, well, that makes sense because this was support, which became defended support momentarily and then resistance. So, somewhere up in there is where I'll be looking for this to move. But I'm not going to just buy it because I think Mobileye is a great, sexy company and the earnings are this, and self-driving cars are all the rage. I want to buy it when it makes sense, when the buyers have regained control. Otherwise, it's just a good story. And if I want to trade it, and if I feel like I need to trade it, well, then maybe I'll go down to a 5-minute chart or a 2-minute chart and trade it there. But I'm not interested in doing that. I'm interested in the swing trade setup.
Got it. Question I have for you is, when you how do you identify potential stocks to trade? Do you look at fundamentals, or do you look at certain sectors that you prefer, or do you look at charts, or do you see what potential setups for the anchor VWAP are? Like, what is your identification strategy?
Yeah, my main thing, Roseanne, is I look at multiple time frames together, and I scan through a large universe of stocks. And again, I've been doing this full time since 1991, so it's easy for me to go through a list of 1,000 stocks on the weekend, drill that down to 300 I want to watch for the next week, and I don't watch them and think I'm going to trade all 300 of those. That would be insane. Nobody wants to do that. But what I do is I get a feel for the market based on a bottoms up approach, saying, on my list I've got AMAT, I've got AMD, and I've got NVIDIA, and they're all looking like they're getting ready to go. And then I look at the semiconductor index and, it doesn't look ready yet, but so I use the stocks. I'm a big believer that the sector follows the stocks, not the other way around. Most people say, I want to look at the markets, look for a healthy market, look for the healthiest sector in there, and then look for the stocks underneath the surface. To me, you get a better feel and ability to anticipate where the market's going by looking at AMD and Intel and AMAT and NVIDIA and saying, look at how we're rallying right up to that VWAP off the peak again.
Wow.
And say, here's where the market is telling me I should look at these stocks because they've pulled back. They look like they're in a short-term stage one, like Mobileye is. And I look at that chart, and my mind just automatically draws in the scenarios of what could happen.
I see.
And I look at that and say, here's what could happen in the next 2 to 3 days, kind of like I drew in for Mobileye. And that's one I want to put on my list that I want to watch each day, just to see if it's setting up the way it is, to gain familiarity with the way the stock trades. And you just become a little bit more intimate with the stock.
Absolutely.
So that when it really sets up, I've got a plan that I can say, okay, here's the personality of the stock. The stock is a little bit crazy. I want to, maybe just forget about this stock or use smaller share size or, something like that. But it's all about a bottoms up approach for me. And I look at trending stocks. I want to see them in that pullback mode and start to anticipate what could change in the next 3 to 5 days next week. That's how I come up with my list for the week. What could change in the next, 2 to 5 days that I might be able to trade this stock on Tuesday or Wednesday or Friday of next week and go from there.
Beautiful. I love how right now, this chart, we're seeing how the trend is hugging that anchored VWAP. It's right underneath. It just touched it and it's staying in that range. It's like amazing how, and then the anchored VWAP is dynamic. It's changing with that trend and those trades.
Yeah. And
it's amazing.
Here's the thing, Roseanne, is why does this work is the question, right? Why does it keep coming up to that VWAP from 15 minutes ago? And why does it keep getting sold? Because there are hedge funds out there. And I spoke to, Tommy Thornton, I'm sorry. I knew a Tommy Thompson as well, but Tom Thornton used to work at a multi-billion-dollar hedge fund, and they were very aggressive. And, he told me, Brian, the guy that they work, the guy whose name the fund was under, he would say, after a stock made a near-term high, it hit their price target of 37, let's say. I want to sell 500,000 shares in the next 30 minutes at VWAP or better from that peak. And I don't want to do more than 10% of the volume. So they have these advanced algos that would go in and build this, and they will sell in these little 2-minute time buckets, just a little piece of that. And each time it gets up to that level, they're going to lay on a little bit more. And if it gets up through it, they're going to really push hard and try to accomplish more of that order at the price above that, because they want to because the brokerage firm will say, we'll give you guaranteed VWAP from that point. We'll give you the price a naive trader could expect from that point. So it kind of puts a lid on the stock from there.
Fascinating. Thank you so much for sharing that.
On a 30-minute time frame. It's a 30-minute trade. That's the point. It's not just for these longer term, build a position of 5 million shares over the next month.
Well, if it's good for these institutions and they follow it, I think it's absolutely imperative that us retail investors follow as well and utilize these rules. And this is very impressive, watching this on the chart in live real time. It's actually just following underneath that anchored VWAP from that high just about at past 2 o'clock today Eastern time. Interesting, fascinating. Thank you so much for this demonstration. This is a live demonstration. This is really amazing. A live demonstration we had today. Awesome. So I want to ask you, how did your lovely wife, Leanne, improve your book? You mentioned her in the book and how she helped improve it. What was her contribution?
Well, I had a developmental editor who helped me with, laying the chapters out and where things flow and that sort of thing. And she just kind of, helped me put the pieces of the puzzle in place. But as far as, line by line reading, my developmental editor wasn't engaged in that. And I wasn't sure. My first book, I had a woman who kind of did it all. She, helped me with the design, all of it. So this one, I didn't have that person to read it and say, this makes sense or that doesn't make sense. It was more, does it flow? My job's done. So she did a great job with that. But my wife, Leanne, said, Brian, your name is on this. Let me read it. And, she works with me. So she's not a trader, but she hears me all the time. And she hears me talking about this silly VWAP thing and, the moving averages and time frames. And anyways, she said, let me read it. And she would read it. And I thought, I would think I wrote something just so clearly that I deserved a Pulitzer Prize for it. And she would just come in and go, Brian, you have to change this. You have to change this and this. I'd feel all deflated and get defensive, but I knew for a fact she was right because she has a little bit of understanding just based on, listening to what I say. But if it's not clear to her, then how can I sell this book to other people and expect them to follow along? So she made all kinds of just amazing recommendations for here's how it can flow better, make this clearer, reword this, change this sentence, put that word in front of this word. And I mean, it's the book went from a C to an A because of what she did.
Oh, I love that. That's so we thank you, Leanne, for all you've done. The book is A+ in my mind. Definitely an A+ book. My favorite one on trading for sure. Very important book. And we want to know your future plans. I saw on Twitter there was some tweeting going on about an automated anchored VWAP. What's going on with that? Any plans with that? And what are your thoughts?
Yeah, John Muchow does a great job of creating things for different software platforms, TradingView in particular, and a lot of people have trouble with where do I anchor, and to take away some of that subjectivity, it's to create some programs that do the week to date, the 2-day, from the most recent big high after let's say we have a high and and you're looking at a weekly chart. How do we know it's an important high? Well, maybe it pulled back at least 5 or 6%. So we're going to automatically anchor a high to that point. Or in the daily time frame, if it pulled back 2 to 3% over 3 days, then we're going to set an anchor there. So just to kind of help people visualize it easier and put some training wheels on it, truthfully. My fear is, though, that people will use these and become dependent upon them and expect them to be a system rather than realize there's a real art to it. And what you see, I just drew in there. And again, you can't make this up. We had repeated tests of that resistance, like that VWAP from that peak. I popped one in from this low, that held it. And these circles I just put in are to indicate that's where buyers just took control for this move. Now we're getting a little bit extended. So if you're going to be a buyer here, your stop would go under here, number one. And to sell some on this breakout, at this point, I didn't take this trade, but I would sell half of it on that move because we're getting extended.
Yeah.
In the time of day that we're in, maybe we're going to get a little bit of a pullback. And now the stop would be right here at the conjunction of the VWAP from the low and that high.
Is that a pinch?
Break even.
Is that a pinch right there from that low to that high? That would be
even on this, this 20-minute. So we saw this pinch right in here. And we're seeing this pinch right here.
Nice.
And it did what it's supposed to. I mean, again, you just can't make it up. And here it is in real time.
Wow. Yeah, nothing goes straight up or straight down. It moves as there's a battle between the buyers and sellers. And look at that go. Wow. I am interested to know what news hit the market today.
I have no desire at all.
I'm
None.
curious. I'm just so
It
curious.
won't help me.
I love this. So, Brian, thank you so much for everything. I just want to say, before we go into Alphatrends, and you tell us about the services that you offer, excellent book for all. I love it. I think it's just the Anchored VWAP makes total sense to me. I think it's, in my opinion, it's the best indicator. And I promise you, Brian's not paying me to say this. I mean this completely from my own self, reading this book and using it. And that's key, to use it. And I've been placing it a lot on the price highs and lows. Love it. Absolutely love it. And simplicity is key. Look, we have bandwidth constraint. We want to minimize noise. We have information overload already. And I keep my charts simple. And this is the #1 indicator. And I love it. Thank you so much, Brian, for writing this book and letting us all know about this amazing indicator. Tell us about Alphatrends. You founded this amazing stock trading educational company. Tell us what the services that you offer are for everyone.
Well, I'm glad you described it that way, because it's really meant to be educational. Each day I do some videos. I do a end of day wrap up of the market, the S&P, the NASDAQ, the things you see in my weekend video. I do that every day for subscribers. And then I talk about, in another video, trade ideas for the next day, or ideas that we currently have open, updating the stops, and laying out just the way I did with these other stocks. Here's what we're looking for in Mobileye. It's a couple days early. Let's keep an eye on it. Let's start to stalk this trade. And then, in 2 days, maybe I think it's actionable. I'll say, I think it's actionable above this level with a stop here. What I don't like is if people say, Brian, you told me to buy it here, and you told me to set the stop. And I can understand why people get confused with that, but it's really meant to say, listen, we've been talking about this stock for the last 3 days. We've been watching it develop. It's starting to develop the way we anticipated, just like we did with this S&P here. Now it's time to say, does this trade make sense to you personally? It's your money. Do you think it makes sense? If so, well, then you should buy it. If you think it's going to make money, we're adults here. If you think that it's too risky, well, then I don't care. I don't care if you don't buy the idea that I think is a good one.
Mm-hmm.
And, it just doesn't matter to me, but set your stops. So, I have the forums where, people can ask questions about the stocks they're interested in, a forums board. And then every other week I do a live video for subscribers, a live webinar like this, where we go over educational concepts and really try to hone in on mostly education. Then we look at some stock ideas as well, but that's the least informative part. A lot of subscribers think, hey, it's really important for Brian to look at my idea, but that's the least important thing that I can do. It's more important to say, here are the concepts, and I'll look at your stock, and here's why I don't like it. Here's how I might like it. Here's how supply and demand is telling me, the translator. That's all I am. I've listened to this language of the market objectively for probably 20 of my 32 years of experience. And now I am the translator. I can explain to you why it might not make sense, put that in plain English, and then it's up to you with your money to decide what to do with that.
Absolutely. It's about being accountable,
Yeah.
making our own decisions. You don't press the buy button for us. You just help decipher the patterns that you're seeing and give us great ideas and just teach us all how to capture some profits from this, what we're seeing going on.
Right.
When I'm looking at this live, it's fascinating seeing some higher highs on this shorter time frame, and we'll see how it materializes into close today. Will we have it hold or will it sell off? Interesting to watch. Yeah, it's subjective versus objective for unbiased analysis of price action. Excellent tool. In closing, I love your quotes. Okay, throughout your book, you have Epictetus, you have philosophers, you have great quotes. And I want to end with this one, which I think is very appropriate with the anchored VWAP. Man's mind stretched to a new idea, here insert anchored VWAP, never goes back to its original dimension, by Oliver Wendell Holmes Jr. And that's absolutely true. That's absolutely true with the anchored VWAP. I, for one, will never be the same again. To me, this is the most valuable indicator. So I think that once you read the book, you'll probably agree with that, because price, volume, time, and only price pays.
Yep.
So this has been truly a pleasure speaking with you today and enlightening us on your thinking inside the mind of an expert, a rapper, Brian Shannon. Thank you so much. And we're forever changed and for the better because of this.
Okay. Well, thank you so much, Rosanna. And again, now we see that, like I said, if we bought this one, it's extended. So sell half of it up here on the breakout. And now that trade is over. You might still have some from over here. It's all about time frame and making the trade your own. It's not about trading on 1 minute charts. There's just a great opportunity for some education live here today, which I'm fortunate the market provided that. So I think this was a great lesson plan.
Absolutely. This was great. And it wasn't planned. As always, impromptu is the most exciting. So just follow price as only price pays. Thank you.
Thanks, Rosanna.
Thank you for listening.